Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. We've got some caution in the air, and that's seeing the S&P 500 just inching up 0.1% to 5,529. It is on its fifth straight winning day, though, and you have the Nasdaq Composite lower by 0.1%. And the Dow Jones Industrial Average up 0.3% at 40,228. So not a lot of conviction behind the moves, a bit of a mixed picture. And we've got earnings on the way as well, coming through from the likes of Amazon, Apple, Meta Platforms, and Microsoft among them. And that's going to be steering some of the market sentiment this week and helping us out to preview some of the numbers. We've got Jay Woods. He is the Chartered Market Technician and Chief Global Strategist for Freedom Capital Markets. Jay, good morning. How are you doing today?
Hey, good morning to you. I'm doing great.
Yeah, always great to have you on, Jay. So let's talk about this week, of course, with the Max 7 in focus. So let's start there. We've got markets in quite choppy times in recent days. So we've been seeing some pullback of sorts. And if you look at the Max 7, they've been also going through a bit of a correction or pullback at least. What do you take away from the recent market action and how are we setting up for the earnings this week?
Yeah, it was nice to have a quiet day today. I mean, we just really didn't do much of anything, and the volatility is kind of winding down. We've had 5 straight winning days after some crazy volatility when all people can talk about are the tariffs and what implications they're going to have. And the stocks that have been affected the most have been those Mag 7 names. So this week, we get a little bit of a reprieve. There wasn't much news out of Washington, which was good for the U.S. stock market. And now, hopefully, and that's the key word, hopefully we can focus on some earnings in 4 of the Mag 7 stocks, the ones you named, Meta, Microsoft, Apple, and Amazon. And then we'll see if they give us any guidance. I don't think we're going to get a strong guide from anybody, given the uncertainty we continue to see with Donald Trump and Washington negotiating tariffs in the media day to day. But it will be nice to see how we did last quarter, see if we can get this relief rally to continue and maybe get some guidance. But right now, no one's anticipating any guidance, but we do anticipate the earnings should be good and probably beat expectations.
Yeah, so that is set up right now, right? We've just marked 100 days of Donald Trump in office, and it looks like going forwards, there is more deal making rather than tariff setting. So is that going to mean markets being set up for better quarters in the days ahead?
Well, I think there's been a lot of damage done. It may take us a little while to rebound, but what I think we've seen now that the lows have been set in. We know what the worst case scenario could be with these tariffs if they were to go the way the Trump administration had planned. And now every day as they walk it back a little bit more, we see that floor lift a bit. So this range around 5,500, this is nice if we can stay there for a little while. Then we want to watch 5750. That's the 200-day moving average. We've been below that for quite some time. To me, as a technician, as someone that follows the market closely, that price action, it would be a very strong sign and signal that maybe the worst is over if we can get back to that level and get above it. But we're going to crawl, then walk, then run. And I think we're in the walking phase of this recovery. And these earnings and then some tariff certainty sure would help. But it's going to take some time. We've really suffered a lot the first quarter of this year. And if we can finish April strong, then who knows how that sets us up for the next few months.
Yeah, so we've already heard from one of the Max 7 at least with Alphabet reporting numbers, and that was rather encouraging in the sense that we saw the digital ad spending, that sector at least quite resilient. That was one of the big drivers for their numbers beating expectations. Could we see the same for the rest of the Max 7 as well when you look at how tech and AI is still quite in demand?
There are a few things you have to watch. Continue the AI story, continue to see what that CapEx spending is and how they're developing it. When you talk ad spending, watch Meta. Meta gets a lot of its ad spending from some Chinese companies like Shein and Temu. Let's see if that relationship between China and the U.S. has affected ad spending there. And then Apple, the relationship with China also has something to watch because iPhone sales have been dipping, but manufacturing is starting to shift to India. What kind of progress are we seeing there? How deep has the Chinese market affected their bottom line? And then AI, they've tried to implement it with their latest iPhone release. Let's see if it's really picking up some traction. Microsoft is about the cloud and the continued CapEx spend. And Amazon, another AI story. Watch to see if they talk about Rufus, which is their AI shopping assistant that's supposed to help. It was being rolled out over the last quarter or two, but we haven't seen it really affect their bottom line. And then Amazon also will talk a little bit about how the American consumer is spending. Right now, we've seen a spending spree before tariffs may be implemented. We'll find out maybe if it was just people rushing to buy things before prices went up, or maybe the consumer continues to be resilient and we sold off a little more than we should have when we got hit the last few weeks.
Yeah, talking about prices going up, that's going to be one of the readings we'll be watching out for this week with the personal consumption expenditures, which is one of the Fed's preferred inflation gauges. Walk us through what you're expecting on that front. By and large, it does look like inflation is not as big an issue as before.
Yeah, it's about inflationary fears. We're fearful that DOGE will cause unemployment to rise, and we get April unemployment numbers on Friday. And then, of course, on the inflationary side, you mentioned it, the PCE is the Fed's preferred inflationary gauge. That's supposed to tick down from 2.8 to 2.6%, which would be the lowest level we were at since September when the Fed started cutting rates. So if these numbers do come in line, they haven't shown that inflation is starting to get away. It's been sticky. We're at same levels we were 4 months ago. But the fear that these tariffs are causing us has not been seen in the numbers. So let's look at the hard data and then see what Jerome Powell says about it when the Fed meets next week on May 6th and May 7th. I don't expect the Fed to do anything but keep rates paused for now. But if the data does come in line or even softer, that will give them room to cut. Now the question is, would Jerome Powell cut after the president put pressure on him? That could lead to people talking about his integrity and he bowed to the president. So there are some egos involved, but inflationary data does not say we are in trouble at this point in time. And we think this week the hard data that we get should, lead us to believe that rate cuts are still on the table in the near future.
That's right. So it's not just inflation, but also jobs data coming through. So the non-farm payrolls data, that could paint a picture of where the U.S. economy is going. What are you hearing or seeing when it comes to potential layoffs or these companies just feeling a bit more cautious about where things are going?
What we're not seeing hiring, but the layoffs, everyone expected DOGE to put those numbers through the roof. We'll start getting results from the DOGE cuts this quarter, this month, and next month. So see if it does tick up. But currently at 4.2%, and that's what they expect, it's still at historical lows. So there's no fear that unemployment is running rampant. No companies are cutting back. They're just not hiring right now. So we're kind of at a stalemate waiting to see what the tariffs do. If tariffs do cause inflation, you're going to see companies cut back costs. How do they do that? They lay off employees. So we're still at this stalemate until we get more clarity on the tariff front. And that's why Jerome Powell isn't ready to cut rates, because if he cuts and then inflationary data comes through the roof in the next few months, he's going to look foolish and he may have to raise rates again. So we're at a bit of a stalemate. Until we get clarity from Washington, it's going to be tough for the Fed to do anything. They're kind of caught behind the 8 ball right now.
All right, and just to wrap things up, we've got gold in focus as well. That's been getting a lot of interest. And of course, with all the uncertainty in the backdrop, it has seen prices jump by over 40% in the past year. Are you on board this rally, Jay?
I think this rally could continue, but what I'd like to see is just some sideways. I think gold has become a very crowded trade, and everyone's getting into it. Everyone's talking about it. It seems a little toppy over the near term, so I would wait to get into gold on a pullback, and if I was in it, like some very smart people were, I'm not one of those people, unfortunately, I would take profits given the crowded trade. When everyone's starting to talk about it, to me, it's a little overbought. It's a little overdone. I look for a pullback. I think Bitcoin may be an opportunity to buy, because that looks like it's broken out of a nice little downtrend, and it should be back to 100,000 within a couple weeks, if not sooner, given how quickly people move into Bitcoin.
All right, Bitcoin now at around 94,000. So lots to look out for in the coming days. Thanks so much for your time, Jay. It's been great chatting with you.
Thank you.
All right, as always, Jay Woods helping us out with what's going on in the markets. He is the Chartered Market Technician as well as Chief Global Strategist for Freedom Capital Markets. Stay with us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.